Hello friends, welcome to Bankers platform. So friends, today we have come with a new video and this video is regarding the memory recall questions. And these are the memory recall questions for the subject that is certificate course in foreign exchange operation. And today we have covered the memory recall questions which have come in the exam which was held on 28th June 2025. So let's start. What are the questions were asked in the exam? So it will help you in coming exam. Let's see. The first question is, who is considered a person of Indian origin? Our options are a foreign citizen who has never visited India, a foreign citizen who held an Indian passport or whose ancestors were Indian citizen, only current citizen of India, a person born in India but now holding foreign citizenship with no Indian ancestors. So let's see what is the correct answer. So correct answer is B. That is a foreign citizen who held an Indian passport or whose ancestors were Indian citizen. Okay, so PIO, person of Indian origin, refers to a foreign citizen who holds an Indian passport at any point in time or who has Indian ancestry through their parents, grandparents, or ग्रेट ग्रैंड पेरेंट्स बीइंग सिटीजन ऑफ इंडिया। तो यहाँ पे फ्रेंड्स जो पर्सन ऑफ इंडियन ओरिजिन है दैट विल बी हु इज अ फॉरेन नेशन पर्सन। ओके, ही इज ए फॉरेन सिटीजन, बट you have to remember that at any point of time their parents were Indian or grandparents or great grandparents they were Indian. So then this person will be called PIO. Okay, so first option is saying a A option is foreign citizen who has never visited India. So who has never visited India, he is what? For India. He is a NRI, a type of NRI. Okay, but he is not a PIO. Okay, so only current citizen. Current citizen will be always called NRI. Okay, so that will be called NRI. A person born in India, but now holding foreign citizenship with no Indian ancestor. So he's already born in India, so he is Indian only. Okay, he is Indian by birth, so he will also be a NRI. Okay, so here B is the correct answer, that a foreign citizen who held an Indian passport or whose ancestors were Indian citizen. Okay, so B will be the correct answer. So this question was asked in the exam, PIO related. So that is important. Let's see next question. ECG claims must be filled within. Sorry. ECG claims must be filed within dash days from the due date of the export bill or dash days from the policy's expiry date, whichever is earlier. The process involves submitting a claim form with details of the loss and transaction, and ECGC verifies the claim and process the settlement. तो फ्रेंड्स यहाँ पे आपको बताना है what is the time limit. Okay, so your options are 180 and 180 days, 180 and 360 days, 360 and 360 days, 360 and 540 days. So let's see where the correct answer. Correct answer is C. That is 360 days. So claim must be filed within 360 days and or from the due date of the export bill or dash days from the policy expiry date. So from the policy expiry date, 540 days. So these two things you have to remember. And ECGC is a very important topic related to foreign exchange. So from ECGC, every time 3 to 5 marks questions are expected in the exam. And I would like to tell you that IIBF is continuously changing the pattern of exam. So if you're seeing here that these questions were memory recalled, and if these questions are there, what are the chances of these questions to be repeated? That cannot be assured. Right now, we have seen that in all the different slots or different days, the IIBF is changing the pattern like anything. Okay, so they are increasing the level of difficulty for the exam. Okay, level of difficulty is increased. Plus, questions are reported very lengthy by the candidates who have taken the exam. Okay, so questions are very lengthy. You have to read a lot. Okay, answer will be very short. Like here, you are seeing answer is 360 days and 540 days. But for 360 and 540 is the answer. You have to read minimum 10 to 12 lines. This much lengthy questions are also there. Like simple one-liner questions are around 10 to 15 questions are one-liner. But after that, many students have reported that very lengthy questions are coming. You have to read so much data. After that, only you will be able to give the answer of the questions. So be prepared for that. Uh, your preparation should be a bit of high level. So let's see next. Before moving next, friends, this is the export specific buyer wise policy. Okay, so this is buyer wise policy. So many time question is asked from this topic. So we will discuss here a few points about this buyer wise policy. So specific buyer wise policy cover shipment made to a particular buyer or on LC opening bank for a set of buyer. Okay, so exporter not holding the standard policy, whole turnover policy can avail of this to cover their shipment to one or more buyer. Okay, so what will happen? Whole turnover policy, WTP. So whole turnover policy is taken by the customers. So in that what they will declare that whosoever is our party, that party will be covered under this LC. So whenever they will be doing any consignment, so they will just inform the name of the party to whom they are going to do shipment. Okay, so exporters holding standard policy can also avail this policy for covering shipment to individual buyer if all shipment to such buyer have been permitted to be executed excluded from the purview of standard policy. So this is a buyer wise policy means if a customer is having 10 buyer, different 10 buyers, so for each buyer they will be taking a separate policy. Okay, so that is called specific buyer wise policy. So in this the policy period is 12 month. Risk covered is export to associates and shipment backed by LC. So these are covered under this. Commercial risk and buyer risk is covered, political risk is covered, and LC opening bank risk is also covered. So how much percentage is there? That is 90% risk will be covered. So important obligation of exporter. So they have to pay processing fee of 2000 rupees. So premium is payable in four equal quarterly installment in advance before the commencement of risk, and sufficient premium deposit is also to be maintained in the advance based on the turnover projection at all times during the policy. So submission of monthly declaration of shipment by 15th of the subsequent month, notifying or declaration of payment for bills that have remained unpaid beyond 30 days. So if any shipment they have done and beyond 30 days they are not receiving the payment, then the exporter has to report that thing to ECGC by 15th of the subsequent month. Okay, and filing the claim within 360 days from the due date of the export bill or 540 days from the expiry date of the policy cover, whichever is earlier. So this we have done in the question also. And initiating recovery steps including legal action and sharing of recovery. So in this way, this buyer wise policy is working. One is whole turnover policy. In that whatever turnover they will do, that whole turnover will be covered in the policy. That we'll discuss in some other video. So here we have discussed specific buyer wise policy. And mostly people will take this type of policy also because the buyer, if they are going for a new buyer, that time they can take this policy. And in whole turnover, their expenses will be high. Okay, let's see next question. In India, the external commercial borrowing policy allows company to borrow funds from overseas sources under specific limits and maturity period. ECB limit vary based on the borrower sector and purpose, with maximum amount and minimum average maturity period prescribed. So what is the minimum average maturity period for ECB? So external commercial borrowing, what is the minimum average maturity period? So our options are 1 year, 2 years, 3 years, 5 years, 7 years. So let's see what is the correct answer. Correct answer is third, that is 3 years. So 3 years is the minimum average maturity period for a ECB. ECB is also very important topic. So all topics are important, but the thing is that some topics are more favorite of the examiner, and he will be picking so many questions from there. So like ECB topic is their main guideline you should remember. You can score whatever question is coming from ECB. Okay, so in this we'll discuss this a few things. So amount and maturity. So in ECB now in question we studied that 3 year is the minimum average maturity. But this maturity is also depending on the type of the thing that is going to be done, which type of sector it is. Okay. So the maximum amount of ECB which can be raised by a corporate other than those in hotel, hospitality and software sector is 750 million or its equivalent during a financial year. So these all points are very important. From here, 1 marks again you can expect in the coming exam. And next is corporates in the sector, hotel, hospitality, software sector are allowed to avail ECB up to $200 million or its equivalent in a financial year for meeting foreign currency and rupee capital expenditure for permissible and usage. The proceed of the ECB should not be used for acquisition of land. So this point also you can remember that ECB money should not be used for the acquisition of land and other purposes it can be used. So these corporates can do up to $200 million. Okay. And ECB up to 20 million or its equivalent in a financial year with minimum average maturity is 3 year. Okay. So whatever the ECB will be there up to $20 million. So up to $20 million, they will have the minimum average maturity period 3 year. Okay. And if it is above $20 million and up to 750 million or its equivalent, so minimum maturity will be 5 year. So this point you have to remember that the maturity period depend on the uh, sector also. It is depending on the amount also. Like here, $20 million here above $20 million, then minimum maturity is 5 year. So it is up to $20 million, then your maturity will be 3 years. So NGO engaged in microfinance activity and microfinance institution can raise ECB up to $10 million. Okay. So they can do up to $10 million, and designated AD bank has to ensure that at the time of drawdown, the forex exposure of the borrower is fully hedged. So they have to do hedging for these microfinance institution. Okay. Next point is ECB up to 20 million or its equivalent can have call put option, provided minimum average maturity period is 3 years, is compliant. Okay, before exercising call and put option. So call and put option is nothing. It is a type of derivative where they can make the hedging position for the ECB. And here, all eligible borrower can avail ECB designated in INR from foreign equity holder as per extent ECB guideline. Okay, NGOs engaged in microfinance activity can avail ECB designated in INR from overseas organization and individual as per the guideline. So these are the main points. If you remember this much point, so 1 to 2 marks you can definitely cover in the coming exam. Let's see next question. So before moving to next question, friends, don't forget to subscribe. So I'm seeing that many of our bankers friend are coming. They're watching the video. They're getting benefited also from our videos. And if you're getting benefited, so do subscribe our channel. It is a type of support for us. And you can also hit the like button. And if you're having any query, if you're having any doubt, you can just drop a comment in the comment section and we'll try to answer it as soon as possible. So let's see. Next question. Crystallization of an export bill is done when? So when crystallization is done. So the options are the bill is unpaid on or before due date. The bill is paid after the due date. The bill is not paid by the due date and is converted to the local currency. The bill is discounted by the bank. So you have to tell in which condition crystallization is done. Okay. So let's see what is the correct answer. So correct answer is C. Bill is not paid by the due date. So if any export bill is there and the due date of the export bill is 20th June. Okay. So 20th June is the date, and on the 20th June the payment is not done. So already the bank, so mostly crystallization will happen in the cases where the bills are negotiated or discounted. Okay. In that cases, bank will be doing the crystallization. Because what happens that the bank will do the negotiation or discounting of the bill in foreign currency. Suppose USD has to come, suppose 10,000 USD is going to come on 20th June. Okay. So 10,000 USD is coming on 20th June. So bank will purchase 90% and 9,000 credit is given. So bank has done it in the foreign currency. Okay. So on the due date 20th June, the bill is not paid. So what bank will do? Bank will crystallize, but bank will not crystallize on the 20th June. Minimum, the bank will give 30 days time. Okay. 30 days time for the recovery of the bill. Okay, or for getting the payment, 30 days time will be given. And it is also given all banks are free to decide that after how much time they have to do crystallization of the bill. Okay, so some banks are doing in 30 days, some banks will be doing 45 days, some banks may do immediately. Okay, they may do immediately all the crystallization things. Okay, or somebody will give 7 days time. So it depends on the bank policy. Okay. So as per the bank policy, the bill will be converted in local currency. Suppose they have given the advance on USD basis, so they will convert it into INR because they want to. Why we are doing the crystallization? For reducing the risk. So C will be the correct answer, that the bill is not paid by the due date and is converted to local currency. So the purpose of crystallization of an export bill is two. So what is the purpose of crystallization? So first is minimize the bank risk, transfer the exchange rate risk back to the exporter, increase the bank's profit, help the exporter receive payment quickly. So let's see what is the correct answer. Just now I have already explained this. So you should give the correct answer, and it is B. So bank will transfer the exchange rate because uh, bank has purchased or discounted the bill in USD. Okay. And now payment is not coming. So what bank will do? Bank will transfer their exchange rate risk to exporter. Because now what they will do, they will crystallize the bill. So whatever the liability is outstanding in USD, it will convert into INR. And now whenever the payment is coming, that depend on the customer, how he will manage the exchange rate risk. So B is the correct answer. So let's say next question. Which of the following is not a reason for crystallization of an export bill? Non-payment of the bill on due date, failure of the buyer to honor the bill, the bank policy to convert overdue bill into local currency, the exporter's request for early payment. So which is not a reason? So let's see the correct answer. Correct answer is D. Exporter request for early payment. So this is not a reason. So first, non-payment of the bill on due date. So this is the reason for the crystallization. Failure of the buyer to honor. So whosoever is the buyer, he is not honoring the document on the due date. That is also a reason for the crystallization. The bank's policy to convert overdue bill into local currency. So that is bank policy is also a reason. AD category 1 bank may allow resident individuals to book forward contracts to hedge their foreign exchange exposure arising out of actual or anticipated remittance, both inward and outward, without production of underlying documents up to a limit of USD dash based on self declaration. So here you have to tell that all the AD category bank, they are allowing the resident individual to book forward contract. So what is the limit? What is the limit that up to this amount only they can do the forward contract based on self-declaration? Okay, so our options are USD 10,000, 1 lakh USD, 5 lakh USD, 10 lakh USD. So let's see what is the correct answer. Correct answer is 1 lakh US dollar. Okay, so up to 1 lakh US dollar, the they can do forward contract. Okay, they can book any individual, resident individual, or you can say companies also. Okay, they can book the forward contract to hedge their foreign currency up to the limit of 1 lakh USD without production of underlying document and based on self-declaration. They will only give a declaration, and based on that, they will be doing the transaction related to forward contract. So this question was also asked. So these type of numbers also you have to remember for the exam. Then only you are going to pass the exam. Numbers are important, are important. So let's see next question. So before moving that, these are the some declaration and these are the condition. The contract book under this facility should normally be on a deliverable basis. Deliverable basis. However, in case of mismatch in cash flow or other exigency, the contract book under this facility may be allowed to be cancelled and rebooked. So the notional value of the outstanding contract should not exceed 1 lakh USD at any time. The contracts may be permitted to be booked up to tenor of 1 year. So for forward contract, that is 1 year. So before moving further, friends, I would like to tell you that we are having a course on certificate in foreign exchange exam, and also we are having a mock test series. So this will be very helpful for you. If you are preparing for the exam, you can go for our certificate course. In this, you will be getting the mock test videos and study material. Okay, so that will help you in clearing the exam. And if you are already having a study material, so you can go for the mock test series. So this mock test series is very important, and exam is going to happen in next month only. So you are having still 1 month time, and in 1 month you can do a good preparation. So this is about this certificate course in foreign exchange. And second is our international trade finance and mock test series in uh, international trade finance. So on these both courses, a good discount is going on. That is 40 to 50% discount is still going on. And this discount is for a limited period, and it will be only available up to 15th of July. Okay, so up to 15th of July, this discount will be applicable, and after 15th of July, the prices will be hiking. Okay, so I'm telling you in advance, if you want to purchase this course, you can go for the course with the 40 to 50% discount offer, and it is a valid up to 15th July. Okay, and 15th July it is valid, and if you enroll before 15th July, you will be getting this discount. And after that, the rate will increase. So if you are willing to do, you can go for it. Our app is there available on the Play Store, and the link is also available in the description. You can also use the course on the mobile app and on the laptop or computer on a website. Okay. So this was a small information. And now let's see towards the case study. So from case study, that case study related to letter of credit. So many questions are asked in the exam. So now we will discuss this case study and its questions. So case study is a ABC Limited applicant in India issue an irrevocable LC through bank XYZ in favor of DEF Corp, that is the beneficiary in Germany. The LC is subject to UCPDC 600, available by negotiation, and requires the following document. So these are the following documents that is required. First, commercial invoice indicating shipment of 1000 unit of machinery. Full set of clean on-board bill of lading. Consignee to be consigned to order bank endorsed. Inspection certificate issued by independent inspector. Insurance policy covering 110% of the CIF value. LC expiring date is 30th June and latest shipment is 15th June. DEF Corp present document on 25th June, but BL shows onboard notation dated 16th June. Okay, so up to here, that is their condition of the LC to here. Okay, and now here, this is the second part of the LC, that what happened after the LC. That DEF Corp, they present the document on 25th June, but bill of lading showing that onboard date is 16 June. Okay, so freight prepaid instead of freight collect. So in the LC term, it is written that freight collect should be there, but it is mentioned freight prepaid. Okay, no mention of the independent inspector name in inspection certificate. So what is happening? The bank XYZ rejects the document citing discrepancy. So bank has rejected the document. Now we will see the questions and what will be their answer. So first is under UCPDC 600, which of the following discrepancy is valid for rejection? So bank has rejected the document. So we have to tell which is the valid rejection. First, late presentation of document 25th June. Freight prepaid instead of freight collect. Missing independent inspector name in inspection certificate. Both B and C. So let's see what is the correct answer. So correct answer is D. That is B. That is both B and C. So B and C is freight prepaid instead of freight collect and missing independent name. So these both are the valid rejection. And first one is late presentation of document, 25th June. So 25th June is the presentation of the document. So that will not be called late presentation. It is within the time only because the shipment date is 15th June. And after that you can add 21 days, okay, no, NTP, that is normal transit period. So in 21 days document can reach to the bank. Okay. So it has reached on 25th June. So first will not be the valid rejection reason, late presentation. Presentation is within the time because LC expiry date is also there 30th June and they are doing in 25th June. So freight prepaid instead of freight collect and missing independent inspector name. These both are the correct answer. Let's see next. The onboard date on the bill of lading is 16th June, while the latest shipment date was 15th June. What is the consequence? So, date is 1 day later, shipment date. So, what will be the consequence of this? The bank must accept it if the beneficiary provides a waiver. The bank must accept it if beneficiary provides a waiver. Bank must reject it as it violates the UCP 600 Article 19. The bank may accept if the applicant approves. The bank can ignore the discrepancy if other documents comply. So you have to tell what bank will do and means what will be the consequence of this. Let's see. Correct answer. Correct answer is B. That is, the bank must reject it as it violates UCP 600 Article 19. So late shipment is a fundamental discrepancy. So bank will reject the document. So consequence. Here they are asking about the consequence and consequence will be based on the bank point of view. Okay. So first bank will do the rejection. This bank must accept, must is there. Okay. Must, if must is not there and if it is written, bank can accept, can accept it if the beneficiary provides bail, waiver. So here beneficiary provides the waiver. Here it is written like that. So here you have to see the wordings also, that beneficiary is who. So the waiver will be provided by the beneficiary and then bank can accept also. But here it should not be written must. And when the bank can accept if the beneficiary provides the waiver. So beneficiary will not provide the waiver. So here that person will provide the waiver who is the applicant. Okay. So applicant has to give the waiver. Okay. So let's see next question. Based on same, if beneficiary disagree with the rejection, what is the best course of action under UCP? Okay. Request the applicant to waive discrepancy, file a case in court against the issuing bank, correct and represent document before LC expiry, demand payment under ICP 98 rule. So already I have told this answer of this question. So you also be knowing the answer. Let's see the correct answer, and that is A. Okay, so request the applicant to waive. Okay, not the beneficiary. That in the previous, it was written beneficiary. Here it is written the bank must expect as accept if the beneficiary provides waiver. No, here you have to see applicant has to provide the waiver. Okay, this you always remember. The waiver is given by the applicant. Applicant will be giving the waiver that I accept the documents with all discrepancy, and then bank will make the payment by deducting the bank charges. Okay, so here the request the applicant to waive discrepancy, file a case. So correct answer is A. So let's see now next question. Under the liberalized remittance scheme, all resident individuals, including minor, are eligible to remit fund outside India up to a limit of 250,000 per $250,000 per financial year. This applies to both current account and capital account transaction or a combination of the both. However, the scheme is not available to entities like. So you have to tell for whom scheme is not available. Resident individual, NRIs, trust, minor, HUF. So now options are first and second, first and fourth, first, second and third, first, fourth and fifth, and only one. Okay, so you have to tell what is the correct answer, and the correct answer is will be available after 48 hours of this video. Okay, so you have to give the answer of this question in the comment section. Let's see how many of you know the correct answer of this question, and if you know the correct answer, that you have to write in the comment section. So you can see, friends, questions will be asked like that only. Like here, 5 points are given, and after that, in that, the examiner will try to confuse you. One and two, one and four, one, two and three, one, four and five, only one. So you have to tell which is the correct answer, and that answer we will provide you in the comment section only after minimum 24 hours. Okay. So after the release of this video, 24 within 24 hours, we will see the answers, how many of you have given the answer, and after that we'll provide the correct answer, okay, in the comment section. So let's see next. Oh, sorry. Here the answer is there. Okay, so B is the answer, that is first and fourth. Okay, B is the correct answer. This slide I couldn't delete it. Okay, it was also here only. So first and fourth is the correct answer, that is resident individual and minor. Okay, so this scheme is not for NRIs and trust and HUF. For them, this scheme is not available. It is only for resident individual, and in that minors are also there. So if minor they want to do the foreign payment, the minor should have minor PAN card. Okay, so if minor PAN card is available, they can also make the foreign payment up to $250,000 in a financial year. Okay, so let's see next. Okay, so some of the questions we have discussed here, all the questions are not possible to discuss. Okay, so we are having the full set of the questions also, which we have received from the various candidates who have appeared in the exam. So that is available on our app. Okay, so here we'll discuss that topics from where questions were there, like PCFC. Packing credit, foreign currency, 2 marks questions were there. Letter of credit, 5 to 6 marks questions were there. Export related guideline, 8 marks. Import related, 7 marks. Incoterms, 2 marks. Foreign trade policy, 4 marks. Case study, 7 to 9 marks. Okay, so numericals. In some in some slots, like two numericals were there and some were nil. Okay, so it depends on the different slots. FEMA rules, 4 marks. FEDAI, 3 marks. NRE NRO related, 2 marks question. ECB, 3 marks. ECGC, 4 marks. So these are the different topics which are very important, and if you count these all, so overall 50 marks you can get in the exam if you are clear with these all topics. So this exam is not that much difficult. Only thing is that you have to remember, you have to memorize the things. Okay, you have to memorize the things, and you have to understand the concept for case study based question. If case study based question is coming, so you should know the concept of the things. Okay, and in our course we are having the videos also, and we are also having the doubt clearing option. In that doubt clearing, whatever your doubts are there, you can ask your doubts in the chat section, and we will be giving you the answers. Okay. And your doubts will be clearing. So this was all about the memory recall questions topic today. So I hope so. This video is helpful for you. Thank you, friends. Thanks for watching. Don't forget to like, comment, share, and subscribe to our channel if you have not subscribed. So thank you, friends. Thanks for watching. Have a nice day.